Hello and welcome to Valuechain News. I am Naomi Oleribe. First, the headlines. Nigeria, Libya, orders production struggles push oil price closer to $80. With rising thefts, Nigeria records 193 million barrels of crude oil deficit in 11 months. Asset sales to dominate Nigeria's oil sector. Now the news in details. On Wednesday, the value of oil prices went up by 0.24% to trade at $79.47 per barrel, while the United States West Texas Intermediate crude rose by 37 cents to sell at $76.84 per barrel. The prices were lifted as a result of high aggregated production disruptions in Nigeria, Ecuador, and Libya amid the rapid spread of the Omicron coronavirus variant. The three oil producers declared force majeure this month on part of their oil production because of maintenance issues and oil field shutdowns, causing supply shortages at the global market. Nigeria has been experiencing shutdowns due to pipeline vandalism, community interference, sabotage of oil facilities, among others, and this has limited Africa's largest producer's capabilities to increase its production in recent months. Ecuador's government declared force majeure over its oil exports and production contracts on Monday because of the pipeline closures caused by the ongoing erosion in Napo province. The country's crude production averaged 485,000 barrels per day before the force majeure, and by Tuesday it had fallen close to 220,000 barrels per day, according to the government data. Also in Libya, production from El Sharara, Libya's largest field with a capacity of 300,000 barrels per day, as well as the El Field, Wafa, and Hamda fields, had been shut down by the Petroleum Facilities Guard, a paramilitary force whose brief is to protect NOC's assets and facilities due to political disputes. At a projected 1.86 million barrels daily oil production in the country's 2021 budget, Nigeria recorded a huge deficit of almost 200 million barrels in its first 11 months of the year. This was largely due to the rising cases of crude oil theft, aging infrastructure, challenges associated with host communities, underinvestment, and poor security in the waterways. Figures from the Nigerian Upstream Regulatory Petroleum Commission obtained indicated that while Nigeria was expected to pump approximately 635 million barrels of oil by November this year, it struggled to produce only 441 million barrels in the period. Many oil companies are reporting huge losses, sometimes up to 80% of production in the pipelines. When we pump through the pipelines, they only get about 20% of product, and the rest is lost to pipeline breaches and organized theft. The 20% hardly covers the cost of production, an industry expert explained. Some of the operators essentially identified security as a core issue for the oil company, as the product losses through the pipeline are now so massive that it is affecting their bottom line and the country's revenue projection from crude oil exports. Huge quantities of products are daily stolen by individuals and organized cartels of criminals. Nigeria is likely to contend with a gale of divestment by international oil companies to reduce operating security challenges and the huge cost of battling with the COVID-19 pandemic, industry officials and analysts told S&P Global Platts. According to the global provider of energy information, 2022 poses to be a very challenging year for Nigeria, Africa's largest oil producer, with the country facing a race against time to implement reforms needed to bolster exploration and check declining oil production as it fights a wave of divestments from IOCs. It reported that the signing into law of the long-delayed Petroleum Industry Act, previously known as the Petroleum Industry Bill, in August this year is not expected to bring the much-needed succor to the oil sector. The landmark PIA was signed into law on August 16 and is expected to turn the Nigerian National Petroleum Corporation to a private company within 6 months in order to make it easier for the struggling company to raise funds for oil exploration and production. But the impact of this bill has been so far barely felt. Oil well pads in the Kingfisher Oil Development Area are currently facing the effects of rising water levels from Lake Albert, which is claiming parts of the land and mark for oil development. The Kingfisher Oil Development Area, which is located in the district on the eastern shores of Lake Albert, will comprise of 31 wells to be drilled on 4 well pads. However, out of the 4 well pads, 3 are currently submerged by water from Lake Albert. A well pad is a land site that an oil company uses to drill oil. During a field visit, Zakaria Lubega, the head of corporate affairs at the China National Offshore Oil Company, reviewed that well pad 1 is currently fully submerged by water while the lake is eating into the land earmarked for the development of well pad 2 and 3. He, however, noted that plans are underway to secure the land from waters where the well pads are, such that in the future, even the water levels rise, the well pads will not be affected. We are taking a number of studies like the Meta Ocean study, which we started about 4 months ago, where we are again studying the behavior of the lake. As negotiations aimed at restoring the broken 2015 nuclear deal were set to resume, Iran requested that the US and allied governments pledge to allow Tehran to export crude oil. Iranian Foreign Minister Hossein also told reporters that the nation will press other countries to ease the sanction imposed against its oil industry in order to reach the point where Iranian oil is being sold easily and without any barriers and its money arrives in Iranian bank accounts. The landmark 2015 deal eased sanctions on Iran in a trade for adding limits on its nuclear program. President Donald Trump pulled the US out of the deal in 2018 and enacted sweeping sanctions on Iran, including against its heavily relied upon oil sector. The move weakened Iran's economy as exports of crude oil sharply decreased and international oil companies dropped deals with Tehran. The most recent rounds of talks for potentially reviving the deal adjourned earlier in December after Tehran added new demands. Hossein said ahead of the Monday's reconvening that Iran wanted to be able to enjoy full economic concession under the nuclear deal. The World Bank has warned Nigeria and other emerging economies against raising electricity tariffs. The institution, in its latest commodity market outlook forecast, maintained that adjusting electricity tariffs will increase inflation next year. It said the prices of electricity, which peaked at 80% higher this year as compared to 2020, will remain high next year. The bank added that prices will start to decline in the second half of the year as supply constraints ease. According to the bank, global inflationary pressures and potentially shifting economic growth to energy exporting countries from energy importing ones will define the new year. The surge in new prices, Chief Economist and Director of the World Bank's Prospect Group's Ayan Kosei said poses significant near-term risks to global inflation and if sustained could weigh it down important countries. The bank said that the sharp rebound in commodity prices is turning to be more pronounced than previously projected. The bank forecast that non-energy prices, including agriculture and metals, would decrease by 2022 following strong gains this year. However, additional price spikes may occur in the near term amid very low inventories and persistent supply bottlenecks. Before we end the news, here's a recap of our headlines. Nigeria, Libya, others production struggles push oil price closer to $80. With rising thefts, Nigeria records 193 million barrels of crude oil deficit in 11 months. Asset sales to dominate Nigeria's oil sector. And that's the news. My name is Naomi Oleribe. Thank you for listening. Good afternoon.